Hello and welcome, as it is Saturday, 10th day of June, 2017. Let's take a look at fiat currencies, starting within the US dollar index. And many people right now are exiting out of fiat currency into things like precious metals and mainly that of cryptocurrencies. Bitcoin and Etherum, they keep on rising large in price against every single currency. And I'm showing a chart of the US dollar index against other fiat currencies. So, with that being stated, let's technically take a look at this thing. And we'll start off within a monthly chart, going back over 10 years. When I see a move happen, like a example of going from point high to point low, and I like to say point A to B, but quite frankly, it's going from point high to low, and then after that, you go to point high, and so on and so forth. But when you're in situations, say, you've come down from here, you're around here, you ask the question, okay, what's going to be taken out next? Is it going to be the high or the low? Well, eventually it was the high, but it took quite some time, as each time within this correctionary front-weighted 18 average of highs and lows, number one, got above it, supported it in here, but unable to break out. Broke down from here, or fell below, but unable to break down. Broke above, unable to break out. Same thing here. It tried to break down here, but failed move, eventually causing what turned out to be this fast move, because since then, the 18 average band, well, it has played for that of the breakout. You get above the 18 average here, come back to support to make a new high. Back to support, matching high, and then stay within this correctionary band within this long sideways consolidation. And obviously, green candle, green candle, green candle, green candle, green candle. I think there's one more or two more. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 in a row at the end of 2014 into 2015. And since that point, there has been consolidation, as we can see with the 18 average in here. Again, in this point, failed breakdown, but overall, you can consider this maybe a little bit of sideways action, but no, it's higher high and back to the band. Well, maybe, okay, if this thing has the situation where it'll quickly make a move down the lower end, whether it's immediate or whether it's resistance down like this, and you barely break in a pattern like this, then yeah, when you see action below here because of this move in here, you can oftentimes say fast move, failed move to be coming, but that's if, of course, on the break of such occurrence. Let's change this time frame out a little bit. We'll try a little bit longer if we can. This is still a monthly chart, but I unfortunately can't put a quarterly time frame on Trading View. I did figure out how to put a logarithmic setting, although it doesn't really need it too much. Still very much a choppy chart, as its movements had its huge move at the start of the 1980s. Of course, the one that went from here to this top and down into here, and well, since that point, this rough consolidation period in here, interesting move to this high, and then this possible failed breakdown. And it's been such a choppy move, it's tough really to say too much that would be a failed breakdown. However, it's also a lower high to this one that we've had before. And it can still have future gains up to even 110 and make a lower high. And maybe it's going to make a matching higher high, but I really can't make any real predictions on what's going to happen, if it's either going to have a test of, say, the 120 previous high, which would be a gain of, we'll say, well, it's a gain of 23 basis points. Or if, say, for example, we would have a move that would maybe test the lower end of this range, or break below 80. It's tough to say what the next key point would be. I know in any downside moves, where did it come from? Well, it's already been at this 92 once. So it came from here. This is that support test there. So 84, 85 area would be my guesstimate for where any future moves to the downside would come into play. And then further upside, breaking here, you'd be looking at establishing a key resistance level between where it was at 104 and its previous high in at 120. Shortening it out to the daily chart, from the top and here at the end of last year, obviously the trend has been lower highs and lower lows, as many resistance hits within the 18 average on its original move lower. Enough where its next leg higher had several support tests, 1, 2, 3, but still made a lower high. The break of this band, huge red candle down day, which was followed through with more decline. And its correctionary move, it got not only to this 18 average band, but it just kept going higher a little bit. But nope, you know what? Once it got up here for another lower high, the continuous pattern still in play of making this low, up to the band, and down she goes, up to the band, back to where it was, and up to the band again. So it's been making all of these lower highs and lower lows. It's at the upper end of this band now. So maybe it's at the stage where it can at least try to neutralize the market. You need the band to flatten out, establish resistance, which like it did back here, established a key level here. Maybe you can try to do that. Maybe. But we know any weakness from this point, because it's came down for yet another lower low with the path of least resistance lower, that if the market does show weakness going lower, it breaks below 97, below 96.80, it's probably going to take out this low and make some sort of lower low again. But to break this thing out, it's going to take a move that you're going to have to see a break somewhere above here, establish some sort of resistance area field, sort of like you would in here, come back to the band, and then break higher. See, at this stage back in here, you're like, okay, I'm waiting to come back, and well, what happens is on the green candle day, you're like, okay, yep, I'm ready to buy if it can show momentum. Then this little pause day, weak day, and the big red candle down day. So as you're seeing momentum going below here, you want to maybe get into a short camp. And then you see with the bias of going short here, look at the rest of the way. It's done relatively well for that type of biasness. Let's now move this on to the US cross with the Canadian cross. And how I look at this is when I look at prices in US dollars, like that of silver, gold, Bitcoin, I pretty much have to multiply it by a little over a third more, because it's 1.34, so it's 34.68% more. Then it was higher in here, 137, and obviously for the past year and at the end of last year, it's been in a trading range from 130 to the 137. The key levels, of course, you have the key low, you got this high, higher low, higher high, and right now it looks like it's within this this low here. Last time when it got going, it had this failed breakdown in here, and then on the first moment breaking out above the 18 average band, no problem with this resistance in here. Little bit of consolidation back to the band and huge move to the upside. Since then, it's been straight down. Well, straight move down from here. And then sideways consolidation. And it's within the band and it's been chopping back and forth. So all total correctionary phase, obviously. And if it ends up breaking below here, then it's pretty easy to say that we can now start to talk about, well, higher low, and we're probably going to end up seeing a lower one going there. And this move is ultimately over, and whatever 61.8% is between this mark somewhere in here somewhere is going to be the key support area. Any type of move getting above it, well, that's a result of a new trend, and it could be like this here where it just shoots up, or the conventional style that I like to see where you establish a resistance field, come back, and then up it goes, sort of like it was shown in here. Switching it to the weekly time frame, and there's a situation. You have this high, you have this low, so what's going to be taken out next? This high or this low, because this was a pretty severe decline. Several red candles, almost all but one in a row. And since then, several periods barely grinding its way to the upside, albeit this resistance level in here acting as support right now. Okay. And it's got an uptrend. But again, the rate of ascent is so slow. I could put an uptrend here easy enough. Then again, in here, notice that it's no longer resisting the upper part of this trend. Is it running out of steam? Is it prepared to head lower because of such? Okay, you come up above the band on here when you make this move after a nice correctionary play. That looks pretty good. And back to the band. I mean, it's not a bad sign that it barely goes over and corrects, because any momentum going higher, breaking this resistance, then the next target is to this high with probably maybe a couple different highs along the way. And then if that's on the if case scenario. I know when I look at where I think Bitcoin and silver prices are going to be, I always think about that in US dollars. So I'm thinking about, okay, Bitcoin breaking 10 to 13,000 into next year, silver breaking that $50 high well into the hundreds. But when I'm thinking, oh, well, silver is going to be like $300 US, which will be about 300 Canadian, maybe only 275 Canadian. Because when we have situations of silver and gold going higher, the US dollar usually weakens. Well, the last time there was a rally with gold and silver, that would have been from this level in here. Silver bottomed at about $8 in here, and then went from that point all the way to 50. And then the silver bear market. And notice the trend change. You got key, low, key, I guess can't see before him, but we'll call this a key high, higher high, higher low, higher high again in here. And then the obvious, okay, big high, and since then the consolidation pattern. But if you see some big moves in the gold and silver market, at some point this overextended market will turn over. And you're in a situation where after having this nice move, if this level in here fails at around 1.25, ooh, that could be deadly. Then we're starting to talk about where we were. We were at $1.11, $1.12, $1.13 in here. And even more so, we were at $1.05. And these are realistic levels I would expect it to go to, if, of course, it's going to not hold this key area, because maybe it can go sideways within this range for quite some time. as it just goes into here. And that's just a bunch of maybe, but definitely breaking down below here would show the end of this momentum steam of what was about a 4-year bull market. Now let's put the exact same time frame in for the euro and cross within the, let me just delete the writings in there, which will be easy enough. Between the euro and the United States dollar. And very similar kind of pattern. All this choppy action in here. Just overall sideways nonsense. But from this key point here, this key higher low, definitely making it to the key top at the start of 2015, and then this choppy sideways action. So therefore, this, just like the Canadian cross, breaking down below 86. Oh, that could be an interesting situation where you'll be first talking about this 80 level of where it was to its next support level. Okay, we'll keep the time frame the same, just show the last few periods, less data. And so it's a monthly time frame. And within such, or weekly chart rather, since the break of this point in here, a little bit of resistance near the 18 average of highs, but this is just breaking down from such. So there's the red candle down, a little bit of further decline, some sideways consolidation for a little bit, but still well from the 18 average band. That when a move from either a rally to the point or enough days going by where the 18 average will meet up with it, thus correcting through time, that a good reason to be into the bear camp. Now at this stage, being short at this point, you've got good profits as it is. Is it a good time to short now? You know what? I'd rather see momentum going lower, breaking supports, or at least to see it fail from that correctionary phase first. But I don't trade this because I would rather trade the cryptocurrency exchanges. And let's finish this off within the daily time frame, because this is a really long video, as it is going to be a little under 20 minutes. And lower highs, lower lows, resisting this 18 average. And here's a situation where you could say, oh my goodness, did this not look like a failed breakdown? And, well, not much of a fast move. So not having a fast move fail down lower? Yeah, well, whatever. But on this situation here, when markets were closed, and this is, again, why I don't like to trade this and rather trade the cryptos. Because of shenanigans like this. No one can trade in this time, and a huge gap lower on the break of this support as it's leaving the 18 average band. Big move. There's your rally up to the 18, falling through, matching low, and consolidating within the 18. Will it get above it? Well, it's got a long ways to go to revert the trend, and if it breaks down below here, then you can say maybe another leg lower, and it's got, again, a lot of work to revert it. So I'm just going to leave it at that. End the video, and thank you for tuning in. Take care.